This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
As we're all working from home, you get the authentic soundtrack in the background. So.
Yeah, exactly. Yeah. Okay, excellent. Right, let's go. Welcome back to the Research Talks podcast here on Stockbox with Alan Green, the research analyst. Alan, welcome back again. Here we are again, the end of another week. How are you doing?
Well, my feet haven't touched the ground this week, Mark. It's just been a crazy week once again. Literally the bell rang on metaphorically, the bell rang on Monday morning, and it's just been flat out ever since. So, looking forward to the weekend. Actually, I have to say.
Indeed.
Yeah.
How was your football that you were going to last week? You said you'd give us a bit of an update.
My word, non-league football. It was great fun, actually. It took me back, but Seaford's very windy. It's a very windy town on the south coast, and the pitch is also slanted too. Of course, the wind's blowing one way. So Seaford had the chance to take full advantage of that during the first half, but didn't. But they were playing Midhurst, a Mid-Sussex club, and of course, the second half started, and Midhurst scored 2 goals, literally chipping the keeper from the halfway line. So Seaford lost 4-0, which wasn't a very good result, but they had been doing very well, but they'd lost their past few games, and of course that was the third game in a row they lost. So I think they'll need to regroup and get together. But anyway, the bar was open at the club, so no one really cared anyway.
Oh well, yes, that's the main thing.
Yeah.
Okay. Well, good to hear. So today we're going to be talking about Premier African Minerals, who of course have had some news recently and seen some quite considerable interest tick up there. And also you want to remind us on the Aquis exchange and some of the things that have changed with the main market and how Aquis can sort of fit into that picture.
Yeah, very much so. Aquis is fascinating. I mean, it's really is evolving, as a future destination for retail investors. But yeah, Premier African Minerals, EPIC code PREM. Of course, shares are traded as low as 0.04p and as high as 0.5p on the year already. It's got a market cap of 65 million. Shares are well up this morning, and actually with good reason. The company has a portfolio of assets in Central Africa, predominantly, of course, in Zimbabwe, and an asset also in Mozambique. So I'm going to talk through quickly the assets, the projects that the company has, and then focus on the Zulu lithium project, which is the main turnaround asset for Premier right now. So firstly, in Zimbabwe, the company has a 49% stake in the RHA tungsten mine, and there's resources there of 22 million tons of tungsten at 2.45 kilograms per ton. Premier has invested some $80 million to date. And there's a takeoff agreement there with Noble Resources, and there have been some issues there in regard to resolving equity and funding, which the company is still in the process of sorting. There's also within that the company has an asset in Namibia with MN Holdings. And the MN Holdings own the Otjo Jendu, if I've pronounced it correctly, Otjo Zondu manganese mine, and through MN Holdings, Premier and Neil Herbert have loaned the company as 19% shareholders, and there are discussions for MN Holdings to to finance various ventures once Premier African Minerals completes its review. And of course, this is ongoing. Neil Herbert recently extended a personal loan to MN Holdings, and this is all tied in with the RHA tungsten mine as a potential sort of a vehicle for the future. So that's that's those two assets. There's the Katata rare earth asset in Matabeleland, close to the border. There are some 25 rare earth claims estimated there. Total rare earth values there of about 14% across the works previously undertaken. There is the Tinde fluorspar project, which is a dormant fluorspar mine where Premier has an interest, and also in Ethiopia there is the Danakil potash project, and there has been a development on that recently, which I'll come to after we've looked at Zulu. Mm-hmm. So the Zulu lithium and tantalum mine, there's recently been a reversal which has really triggered the upswing in the share price. There's been a reversal in the rights that Premier has over that mine, so they now have the right to continue to develop that mine. There are some 14 claims over 3.5 kilometers. Drilling was undertaken in about 2 to 3 years ago, and established a maiden mineral resource estimate of 20.1 million tons. And the company raised a further 800,000 at 0.16p in December last year to continue to develop and grow the asset. And it's this really the company sort of updated on February the 7th. That's a few days ago, on the assays that had been extracted from the Zulu project. To date now, during last year, and obviously since the money's been raised, they have drilled 6,000 meters in total. They've also engaged Shango Solutions and Stark Resources. Shango are going to map the ore body that is emerging as a result of the work that's been undertaken, and Stark Resources have basically been engaged to design a processing plant and to really map out the route to turning this into a producing mine. So it could be absolutely huge. In fact, on the most recent presentation, there are some charts which compare Zulu to other lithium projects across the world, and I mean it's a major project in size. For instance, if we look at the Core Lithium Finesse project in Australia, that's got a valuation of some $95 million. In total, and the Zulu project currently is estimated to be at $52 million in total. So it's a huge asset, and I think as it comes closer to production, that the value will increase. But in addition to that, Mark, as we've discussed on many occasions, there is a well documented and accepted supply squeeze that's coming for battery metals, particularly lithium, so that could well propel the price much higher than we currently see it. But of course, that's just based on the current acceptance and the understanding of the supply squeeze in the marketplace. Mm-hmm. So that really brings us up to date with Zulu. Of course, in the interim results, the reversal of the impairment at Zulu triggered a huge operating profit for Premier African Minerals for the 6 months to June the 21st. And of course, this it's also resulted in a big upswing in valuation both for the company, and also you've got some major shareholders in the company, James Godsey, who owns 7.1%, and of course the man at the front of it all, call, which is George Roach, who is the who's the eponymous CEO, very enigmatic fellow. And I know you've spoken to him on many occasions, Mark. And George, of course, now also owns 7% of the company too. And I think that's what engages a lot of shareholders with Premier African Minerals, because the CEO is so engaged. When you've got a CEO that owns 7% and is driving it from the front, then it's very easy to I think understand what's driving the company, and the fact that you've got a major shareholder right at the front driving development and growth. So that's Zulu in a nutshell, and we're going to hear plenty more from Zulu in the coming months. There is another development too. I mentioned in Ethiopia the Danakil potash project, which is a world-class potash project. Now, Premier has just over 5 million shares with a company called Circum, who were the owner and shareholder in the potash project. They've just announced, or they announced recently, that they had exchanged the 4% interest in Circum for a 13.1% interest in a company called Vortex, who have acquired all of the shareholding in Circum, which basically means they've acquired the Danakil potash project. In doing so, they've also acquired the minority shareholdings of several other shareholders in the business too. So very much aligned their interests now going forward. And of course, Danakil is in the process of de-risking. It's a huge asset. A mineral resource estimate of 2.8 billion tons of potash, and this is, of course, potash it's got multiple uses, both in fertilizer and agriculture worldwide. It's estimated that after de-risking, Danakil will produce some 750,000 tons per annum of sulfate of potash. The only fly in the ointment, if you like, here, of course, is the current conflict in Ethiopia, and whether that will continue to weigh on or create interruptions in the supply chain going forward. But of course, that's I think is one of the risks of investing into certain countries in Africa where the regime and the incumbent regime is unstable. Nonetheless, I think go back to my comments about George Roach again just now. George Roach is a South African himself. He's got a very clear understanding of the dynamics of developing mines and developing assets in and across the African continent. So there couldn't be anyone better at the helm, really, to see it through this process. So in summary, we've got a very bright future. And I mean, as I'm looking at the share price today, I mean, the share price is up 12.7% today. And this is over the past few months, we've seen the share price climb from 0.019p up to 0.38p. So, the share price has virtually doubled in that time. But with good reason. The reversal of the impairment means that Zulu is now a highly valuable asset. It's comparable to some of the world's leading lithium projects right now, and this is where we're going to see the value going forward. But it's not just that; it's all of the other assets that are owned by Premier African Minerals, and as with any good mining investment company, it's this spread of risk. You've got some projects that are near term, are going to develop and produce near term, and then you've got some early stage projects which are longer term, but could turn around and suddenly become a huge asset. And that's the exciting thing about Premier African Minerals. And if you're going to bet on anyone, I think George Roach is a very good fellow to put your money behind.
Okay. Well, thank you for that, for presenting that case. You're right. I have spoken to George a fair bit recently, and things really have, progressed rapidly at Zulu, and the focus is very much on that. I think he said last time there was going to be 6 drill rigs operational, and that's quite unusual, I think, for an exploration company. So it's good to hear that. There's going to be lots of news flow for sure.
Well, I think there was a lot of work's been done at Zulu over the years. The drilling in 2016, 2017 produced that maiden mineral resource estimate of 20 million tons. But there have been a further 6,000 meters drilled since then. So, as you say, many different rigs on the project. They've also, I didn't mention this. Obviously, Shango Solutions are developing the map, the ore body, so they can be visualized more clearly. Start Resources developing the mine, but they've also signed heads of terms with a lithium manufacturer. So that's a very good, a very big step forward too. So I'm sure we're going to hear more about that in the coming weeks and months.
Indeed, indeed, indeed. And of course, the battery metals theme, as you mentioned at the start, there very going to be a big, very common theme, I think, in the coming decades, really.
Decades, yeah, absolutely, yeah.
Okay. Excellent. So the Aquis exchange then, Alan, what can you tell us about changes to the London main market and how Aquis fits into the picture?
Well, the changes. So in last year, the London Stock Exchange announced that the minimum threshold for listing a company on the main market had been moved up to 30 million sterling. And of course, at a stroke, when you've got companies which are valued at 5-10 million, seeking to get onto the exchange via the standard list, which is a much cheaper route to market. AIM, of course, is prohibitively expensive. You've got Aquis as well, but of course, the main market was the preferred route at the time because, of course, you're then sort of open to investment from all the various tracker funds that invest via the exchange, and of course retail investors too. So at a stroke, by doing this, small microcap companies have got to go somewhere else, and the choice at the moment is Aquis. Now, Aquis has undergone, as an exchange, it's undergone multiple evolutions, and I'm going back sort of 10-15 years here. It was OFX in the noughties. Then it evolved into plus markets, and then of course it evolved into ISDX, and then of course it evolved into the next exchange. All the while having a group of companies listed on there, which basically gave it. Initially, it was little more than a match bargain trading facility. But of course, as we know now, liquidity has improved. It's improved over the years. But it was really only when it was brought into the Aquis fold that things really started to move forward. So the Aquis group, they're a technology-driven exchange services group, and they're bringing innovation, transparency, and competition into the exchange industry. And ironically, I mentioned how expensive AIM was, but they are listed on AIM, and of course the EPIC code is AQX. So if we look at the year's highs and lows, we've seen shares trade as low as 480p on the year and as high as 733 pence. Currently trading at 564p. There are three divisions within the group. The Aquis Exchange, which is it operates multilateral trading facilities (MTFs) across Europe. There's a lit order book, non-aggressive, non-client proprietary trading, which offers lower toxicity and risk to investors. Of course, the Aquis stock market provides IPO, that's primary market facilities for companies listing, and of course, many companies are listing or in the process of listing at the moment on the exchange, and it also provides an apex sector as well. That's for companies that are in a growth phase. They publish a growth prospectus, minimum market cap of 10 million, at least 25% of shares in public hands, and at least 2 market makers. They must also have a recognized corporate governance code. But all stocks on Aquis are protected from short selling by third parties. So it really does give little acorns the chance to sort of grow into big trees. That there's real opportunities for companies to really grow and develop and use their collateral to expand. Then we got the actual technologies, which is cutting-edge software and technology engaged in market surveillance, market gateways provided to banks and investment funds, and so on. Chief Executive is Alistair Haynes, and Alistair often appears on seminars or webinars. Of course, there was a webinar recently, an Aquis webinar with UK Investor Magazine, where he presented there. The Chief Finance Officer and Chief Ops is Jonathan Cleland, ex-chairman and HSBC Corporate. Chairwoman Nicola Beattie, and of course, it was announced earlier this week that she will be leaving and stepping down, and coming in is a fellow called Glenn Collinson, who's replacing her as chairman after 9 years. Glenn has worked previously for Racal, Motorola, Texas Instruments, and CSR PLC. So he's going to oversee Aquis through this next phase of development. So Aquis has worked ceaselessly to improve its communications with investors and understand what investors want. So a survey undertaken nearly a year ago via Share Society found that 55% of investors felt they didn't have access to good companies, and access was difficult. So everything that Aquis does and the exchange does is designed to facilitate and improve investor access to getting involved in IPOs, to getting involved in companies at an early stage, as a result of good communications. The business itself is seeing a steady increase in an improvement in liquidity. In May last year, it gained equivalence with the Frankfurt Stock Exchange. Deal quotations for companies listed on either exchange, so it gives exposure to companies across, of course, across Germany and investors using the Frankfurt Exchange. And in August last year, the MTF arm recorded a record market share of 6.2% of all pan-European trading in July last year. And that's a major landmark for the group, because although there's liquidity in MTFs, ultimately it raises the profile of Aquis and will filter down and improve liquidity for stocks listed on the main exchange. So now with this move by the London Stock Exchange, Aquis have got a real opportunity, I think, to capitalize on this improved visibility and liquidity. And the day when electronic trading is launched by Aquis across all of the major brokers, so as retail investors, we can go online. We can still go online, see a stock, get a quote, but at the moment you have to place that trade by phone. So you can get all the information, you still got to pick up the phone. When they move to electronic trading, it's going to be a sea change for every company and everyone, because you can go on your app and just buy the stock literally instantly, without any delay, and that's going to be huge. So we're working towards that day now. In the interim, the company announced half-year results to June last year. 37% growth in revenues to just under 7 million. Positive EBITDA of 1.6 million from 500,000 previously. The company had plenty of cash, nearly 14 million cash as opposed to 11 million previously, and a very strong. Very strong growth in trading volumes as a result of that. Via the share scheme within the company, both CEO Alistair Haynes and CFO Jonathan Cleland bought shares, 1,374 shares each last year at 6.55p as part of their share incentive scheme. And the company this week announced, of course, it's just partnered with a company called Investory, which has really for the first time brought blockchain into the fund market. It's a major step forward. It enables investors to buy and sell investment funds directly from the asset manager on the primary market or via the auction process on the secondary market. And of course, tokenize the process is basically the tokenization of UCITS, which will reduce the barrier to entry and increase trading volume for funds, and is the first ever EU regulated cloud native exchange for retail investors to get into this market. And there has traditionally been, some of the access to UCITS and funds has been, it's been slow. It's not been the easiest route, and probably that's why investors haven't got involved. Through this system, they'll be able to literally dip in and dip out, using a blockchain-backed product. So that's going to revolutionize trading. And again, the net effect is it will all trickle down and improve both volume, visibility, liquidity, and access for access for investors onto the main Aquis exchange. So we've seen shares drift back a bit since those highs. So, but I think as a long-term investment, this is almost a slam dunk. Particularly given the moves by the London main market to raise that barrier to 30 million.
Okay, well that was interesting. It's kind of a double whammy there, Alan, explaining how the Aquis exchange works and how it might play into the future of trading, but also the investment case, of course, as well for holding shares in the Aquis exchange. As you say, ironically listed on AIM. But it would be quite funny if they were listed on their own exchange, I think, wouldn't it?
Yes, I was going to say, yeah. Well, I've no doubt that will happen at some point, but it may not. They may not be able to. Of course.
May not be able to. Yeah. Do you know what the rationale is behind the London Stock Exchange rules changing? Was there some reason why they were increasing the valuations there to 30 million?
I don't know what the rationale was. I suspect maybe some companies got on there because it was a very cheap route to list an asset, possibly something to do with a large number of cash shells around at any given time. Possible flouting of the rules, but also with a 30 million market cap, it's a lot more difficult to get a company to market. You've got the chances are that a company with a 30 million market cap has a solid functioning business behind it, and it's a business that would have to be cash generative in order to reflect that valuation when it comes to market.
Okay. Excellent. Well, thank you very much, Alan, for talking to us about Aquis Exchange and Premier African Minerals.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.